Hello, everybody. Liquidity Hub here, and welcome to the brand new course. This is going to be a little bit more refined, a little bit more um, focused on lit trading. We're still going to be using MSNR, but I've really, over the past weekend, dialed in my understanding of lit trading and added it to MSNR to the point where back testing, I'm getting a lot of trades like Lit Adventure, back testing, getting a lot of trades which make sense from a liquidity point of view. And back testing, I am catching the main move of the day. Now, with that said and done, this first video is going to be on MSNR and specifically it's going to be on MSNR levels from the daily down to the H1 and how these all work. So let's get started. So to start with, just a couple of pointers on MSNR. MSNR, we plot that on the line chart. And obviously, like I said, we use daily, H4, H1. Okay. These all interact with each other, i.e. the, the H4 will deliver the daily storyline. So what do I mean by this? Okay. Obviously, we've got our daily levels. So say, for example, we have a daily level up here. And say, for example, we have a daily level down here. And let's, for example, just say the normal levels. Okay, we're going to go on to the type of levels very shortly. But price will react from here. Okay. Give our confirmation. Okay. And from there, we will now use the H4 levels to navigate from here down to here. Okay. Think of it, for example, like a bus. Okay. These are your two bus stops. Bus stop 1 being the top line, bus stop 2 being the bottom line. And now these red lines are just basically your buses. So from here, we need to get this bus here, and then this bus pulls back down into here. And now what have we created? Well, we created this level here. Okay. So now we react from here, and then we may just go all the way down. Okay. So from us to get from daily level to daily level, we follow the H4 levels, and the H4 levels are the levels that are going to be pulling back. Now, say, for example, these are, H4 levels. What do we do then? The smart ones in the group will already know, be able to tell that we just use H1 levels, okay? So all of these levels, having to do the long and hard way here, so if you bear with me, all these levels are now going to be H1 levels that we're going to be looking at to produce these pullbacks. There we go. Okay, so the H4 will play from the H1, the daily will play from the H4, and the H1 will play from the 15-minute. Now, for those who have been in the group for a little bit of a long time, no, I don't really like to go lower than the 15-minute in terms of MSNRs. So I would just stick to following the H4 storyline and the daily storyline. Okay, so now let's have a look at types of levels. So we've got three types of levels. Okay, the first two are levels that we are plotting on the line chart. Okay, so the first one is a standard high or a standard low. Okay, and these are what I call an A level. Or a V. Okay, A level and B level. The next one is the A level to flip level. Now, how is this? How does this play out? So what we'll be doing is we'll be coming up like we've got a normal level, and then we will close through the level right here on that time frame, and then we should expect for it to be retested from the other side. So this is A to flip level, and then on the flip side, pardon the joke, but we have got the V to flip level. Okay, same thing goes here. We are coming through, we have a normal V level, we close through it on the time frame. So in this example, due to the line color, it would be the H1, and this here is the V to flip level. The final one is a gap level. Okay. This is when we will have two consecutive candles, and we are marking the gap between the close of candle one and the open of candle two. Now, don't worry if you don't see a gap on your broker. It's basically just the open, the close, and then the open of the next candle. And in the bearish example, it'd be something like this. Okay. That these are both. Yeah. Okay, so these are your three types of levels. So now let's go and plot these on the chart. So we're just going to go to the H4 chart here. I'm actually just going to clear my chart. So let's have a look here. So a couple of examples of an A level would be this level here. Okay. This is also an A level. This here is a V level. And this here is also a V level, with this here also being a V level. This is also another A level, and so is this here. Okay, so they're your standard levels. Then, okay, we get an A level, price comes through, and then it turns into a flip level. Okay. You have an A level, price comes through, turns into a flip level. Now, if price flips it again, then that's what you call a double flip. And after that, we can't use it no more. So if it double flips it and then it crosses up again through, then we can't use it. Okay, this here would be a V to flip level. Okay. This here, the V to flip level. Okay, so you can see what I mean here. We have a double flip. We flip it once, we flip it twice, and now if we come back through it, we can't use it again. Okay. And finally, we're going to have a look at some gap levels. So we need to actually go to the chart here. So as you can see, two consecutive candles, one there. Two consecutive candles, one there. Two consecutive candles, one there. Okay, so these are all bullish examples. Then you have here, two consecutive candles here. Two consecutive candles here. Okay, two consecutive candles there. Okay, these are all gap levels. Yeah, again, here, gap level. Here, gap level. Okay, so that's pretty much everything. So now I'm going to show you how price navigates. So what we're going to do is we're going to put it in replay mode here. We're going to back it up to here. So price comes and interacts with this level. So from here, we're going to be marking out H1 levels that could possibly produce a pullback. Well, actually, first, what we need to do is we need to highlight our next MSNR level. So in my opinion, it would be this one. This is our next major MSNR level. We have this gap level here too, but this here is a major one. Now, my opinion on gap levels are they are used more for continuations, and we'll get into that very shortly. So now we go down to the H1. We have a look here. Okay, so we've tapped in. Where are our levels that we can look to go get a reaction from? Well, price could pull back from here. Price could pull back from here. Okay, so let's wait and see. Okay, so price actually does, it taps in there and it pulls back. Okay, and now we can notice price then comes up into this level here. Okay, and now we could expect a push down to here. And there you go, just like predicted. Okay, so now that we've got that, and we've got this level here, that could give us something. And then we've also got this flip level here, a gap flip level. And we'll talk about these very, very shortly, probably in the next video. Okay, you can see there, we had this level here, and we reacted from it, pushing it down. Okay, you can see there, we pop back into that, and now we start to react. But notice here, we are still reacting from the H1 zones. So where would our next zone be that we would want to come and target? I believe it would be down here or down here, completing the storyline. Okay, you can see there we get a reaction, and even here we are reacting. Reacting there, and bang, like so. So you can see how this here was our bus stop 1, this here was bus stop 2, and this here is bus stop 3, and we used these levels here like buses just to navigate down into there. That's pretty much everything I've got to comment on in this video. If you've got any questions, feel free to put them in the questions in the Discord. And then when you're ready, you can move on to the next video where we're going to be talking about how to know when to trade away from an MSNR level.